Stock market, S&P 500, weekly and daily cycle analysis. This is the full analysis of the SPY that I'm going to show you. You can get our full analysis with all of our proprietary indicators, the key levels on all of the indexes, SPX, NDX, and RUT, by becoming a subscriber. All premium levels get the SIR daily. This is an amazing report that's put out every single day. So this is for levels 1 to 4. So just a fantastic report. Please do subscribe to one of those levels to get that report. Questions about that, you can write to Matt at askSlim.com. All right, so let's look at the stock market here. This is the SPY on a weekly chart. Give you a quick primer on what's on here, and that is we're cycle analysts here. The cycles that you see, cycle brackets you see in the bottom, are not the cycles. They're just simply the energies in the market, as we call the heartbeat of the market. And you can see how the key low was right over here and here. Those are those vertical cycle lines there and there. Those are how these cycles actually made their troughs. Cycles are measured from trough to trough and have very common lengths, as you can see. This cycle resolved itself in a very bullish fashion, where there was only a little bit of time to decline. That's these yellow zones that you can see right in here, periods of risk. And when you get positive upside momentum and positive shapes, configuration to these cycles, then you're in a bull market. You could see there's it goes up in this everything bubble that we had here. Then the market peaked, made that head and shoulders top, is very typical, and we got into the Great Reset Phase 1. If you see my year-end show coming up towards the end of the year, then you will get my longer-term view and understand why I'm calling this the Great Reset Phase 1, because I think that the Great Reset is going to take years. So let's take a look now at the intermediate analysis as we look from the peak market right over here and look at the cyclic action. Now let's just look at the minor cycle right in here. You see that one right there? This one right in here, and then this one right in here. So when you get into periods where the cycles are confirmed negatively, they're formed in a way where each low is lower. When you get into these corrective periods, the declines are very sharp. You can see that right there and right in here. Question is, are we now in a stronger rising phase where this key level over here will not be broken? Or will it be broken? And if it were to happen, it would likely happen way out here in the February-March period, where we get into that next period of risk. That means that this minor pullback right in here is likely to hit supports and then move up again. Right over here is what's called a VTL, valid trend line, which comes off cycle peaks. You can learn about valid trend lines in our cycle analysis workshop. And you can see in here, it kind of gets right up to that VTL and then begins to pull back. And there are thick resistances up here. This is the major 50 at 414. This is the intermediate 61.8 at 419. Our original target, first target, was to get up to 406. And you could see it easily did that. Now we're very soon going to get into a period where this is likely to correct. Now, here on Friday, on December 2nd, the news was bad on inflation in the employment report, so the market began to pull back, but doesn't necessarily mean that the top of this minor advance is over. You still could get higher ground in here, and again, 414 is our next target up here, but this 414 to 419 range is going to be very difficult to get through. The expectation is that there will be a pullback here into the somewhere mid to late December period, and then move up again in January. And there is an important VIX trough. The low in the VIX is out in that mid-January period, and that speaks to the fact that we believe that there will be a peak somewhere out over here in mid-January. So if this were to follow the pattern, you would get some gyration right in here, a pullback somewhere around near the 386 level, and then that would occur sometime before year end. and then another upside move to try to test these resistance levels here again. Now, this is an upgrade that we gave it today because now that we've gotten up to the VTL and past this 406 level, the likelihood is pretty good that after this pullback, the next peak will be above this peak. So we've upgraded that because of the probabilities based on the information that comes out of the cycle patterns in here. So again, based on the weekly, a pullback here into sometime in December, and then another rally, and then this is where the big period of risk comes in from sometime January through March, where there's a potential for a decline that would be very severe and potentially getting down all the way to 320. Now, if this low over here that was made in October is the low of this bear market period, then what would happen would be that this decline in here would not make a new low, and it would give us very valuable information. The probability of that happening is smaller than the probabilities of taking out this low underneath that area that it made back in October. So it's a higher probability that it takes out the low, and there is some probability that it stops there and then the next period of rally comes out over here. So right now we stick with our thoughts that this is still a bear market and that all of this that's going on in here is a rebound in the bear market that still has time to go. I want you to see right over here, this is a reversal scout. Now, where the reversal scout turned negative right here, it set up that decline. When it turned negative right over here, it set up that decline. Here, where it turned positive, it set up that advance. So this is what we use on our chart, many of our charts. I love to use it on the weekly chart, and it's still positive. So there's still upward momentum pushing up in the stock market right there. And that is likely to keep this to be quite a modest pullback, as we say, only to 386 on the downside sometime in December. So now when I switch over to the daily chart, let's remember everything I said in there. Here is your daily chart right there, and you can see that major resistance up there from the weekly. This is the resistances in the weekly that we talked about, 414 to 419 right over here. And you can notice in here what happens during these corrective periods right there. You get the pullback, you get the pullback. That was very sharp. This is very sharp. And this is super strong right in here. We call this a swamped cycle, where the energies that are pushing on the upside, as reflected as I showed you on the weekly chart with the reversal scout, are also reflected here in the positive slim ribbon. You also have our slim ribbon right over here on the bottom, which shows you that when it's green, it is not only positive, but when you get these arrows that you see right over there, it tells you that there is a strong potential of an upward resumption. Just like over here where you had the negatives and it showed you a strong potential of a downside resumption, here's where you had the strong potential of an upside resumption. These two lines right in here said that this is the time period where this cycle was like the bottom and then it was likely to move up again. And you can see that there are some minor resistances right in there. Let's just come in a little bit tighter in here so that you can see what we're looking at right in there. And these are supports right there. So the minor supports are coming in right over here at 402 down to about 397. For now, that looks like it will be what holds the downside in here, and the market may try to get up to that level up again at 414. But if it starts to get under that level, and if it gets under 390.14, that is this low, it will set the intermediate minor peak that I showed you on the weekly chart, and then that points down over here to that 386 level that I showed you on the weekly chart. So all of these multiple time frames that I show you here in the analysis we put together is how we develop our projections here using the cycle analysis that we do all the time. Our 4 analysts are expert in this, and it's amazing the great job that we get out of Arvi and Katie and Matt applying as they understand the analysis to everything they do. So we're the only people in the world that have this type of analysis and present it the way that we do. Excuse me, so that you can see the analysis with the explanations and the clarity that we present, the way we present it to you. So stock market on the weekly, I showed you still positive and likely to be moving up with a potential decline into December, and then another upward move into January. That's what we're looking for. I showed you that on the weekly, and this is how it's illustrated here on the daily. Resistance here in this level, 414 to 419. Minor supports here from 402 down to about 397. If you break this level here, you're in the intermediate correction, likely going down to 386. An outside chance of 378, probably not likely, and then moving up again to that area of peak that we're talking about in January. So now let's just look at the VIX on a short-term basis, VIX, because what I want you to see in here are these cycles that are very important. And what they point to, and you can see right over here where the VIX made its low on this cycle, what it points to is that where this bottom came, you can see implied volatility's peaked, spiked. When this bottom came, implied volatility spiked. When this one came, implied volatility spiked. Now in here, it was a bullish market, and they only went up for about 6 days. That could be what's coming right over here. So we're looking for, remember, a decline in the stock market into sometime like mid-December, late December. This is that period where implied volatilities are likely to spike. And then after that, because we think the stock market is likely to rally, it then would be pushing implied volatilities probably back down to 20 or lower out into this period in January. So again, this is inverse to the stock market. And what it's pointing to is this period right in here that is very likely to give you a low in implied volatilities in the next couple of days. Again, this is the range of time right over here, and that points to the peak sometime out into maybe the first or second week in December, and then that's the peak in the stock market, and then after that, an upward spike in implied volatilities that probably doesn't last very long. That just illustrates the likelihood that the stock market it still has quite a ways to go before a peak. The sum of the evidence that I brought you with all of our indicators is suggestive of the fact that the stock market is, while it probably has a pullback coming here in December, will probably not pull back very high, very far, maybe 386 on the SPY, and then get another move to the upside as we look for that next target at around 414 on the SPY.